When many people first arrive in the United States, one of the biggest surprises they encounter is how much of everyday life involves insurance. In many countries around the world, governments provide stronger social safety nets. Healthcare may be government funded, retirement may be supported through national programs, and families often rely more on extended family structures. But here's a catch. In the United States, the system works differently. The American financial system relies heavily on individual responsibility. People are expected to build your own financial protection through tools like insurance, retirement accounts, investments, and savings. Because of this structure, life insurance plays a much larger role in protecting families financially. However, for many newcomers, nobody ever sits down and explains how the system works. People hear about life insurance through friends, co-workers, or social media, but they often do not fully understand what it does, how it works, or whether they even need it. So today, I want to break down life insurance in the United States in simple terms, especially for newcomers, so that you can understand how it fits into the larger financial system. The first thing to understand is the purpose of life insurance. At its core, life insurance is designed to protect the financial stability of a family if the primary income earner passes away unexpectedly. Imagine a family where one or two people are responsible for paying most of the bills. That income supports housing, food, transportation, childcare, education, and daily living expenses. If something were to happen to that person, the family may suddenly face a very difficult financial situation. Mortgage payments still exist, and guess what? They don't stop. Rent still needs to be paid, and if they're not, then possibly the owner can kick that individual out. Children still need to eat and go to school. In addition, funeral expenses in the United States can cost thousands of dollars. And in some estimates, that could be between 15 to 25,000, depending on if it's a physical burial. Life insurance provides a financial safety net in these situations. When someone has a life insurance policy and passes away, the insurance company provides a lump sum payment to that beneficiaries. That payment can cover immediate expenses and allow the family time to adjust financially without being forced into immediate crisis. Another important concept for newcomers is to understand is that the United States financial system assumes that individuals will take steps to protect themselves financially. For example, people are encouraged to contribute to retirement accounts like a 401k plan, IRA, or if you're in the federal government, they have a TSP plan, which is similar to a 401k. They are encouraged to build credit through loans and credit cards, and they are encouraged to protect your families through insurance. Life insurance is one of the core tools used to create that protection. For many families, especially those with children, it acts as a financial backup plan that ensures the family can continue moving forward even after a tragedy. Now, when people start researching life insurance in the United States, they quickly discover that there are many different types of policies. But in reality, most policies falls into two main categories. The first category is term life insurance. Term life insurance is usually the most straightforward and easy one to understand. And affordable type of life insurance is what term life is, completely affordable in most cases, depending on age. It provides coverage for a specific period of time, often 10 years, 20 years, or 30 years. If the insured person passes away during that time period, the insurance company pays a death benefit to the beneficiaries. Because the coverage only lasts for a fixed period, the premiums are generally lower than other types of life insurance. Many families choose term life insurance when they have temporary financial responsibilities, such as raising children, paying off a mortgage, or supporting dependents. Once those financial responsibilities decrease later in life, they no longer need the same level of coverage. The second category of life insurance is permanent life insurance. As the name suggests, permanent life insurance is designed to last for the entire lifetime of the insured person as long as the policy premiums are maintained according to the policy terms. Permanent life insurance often include an additional component known as cash value. The cash value is a portion of the policy that can grow over time depending on the structure of the policy. Some people view permanent life insurance as both protection and financial planning tool because it combines lifetime coverage with a potential savings or accumulation component. And permanent life insurance generally costs more than term life insurance, but some individuals prefer it because it can serve multiple financial purposes over time. And I talk about this concept For example, max funded IULs or whole life policies on my other insurance channel. Regardless, another aspect of modern life insurance that newcomers find surprising is the concept of living benefits, where most people do not know about. And 40% of Americans that say they do not have a life insurance policy. Going back to living benefits. Traditionally, life insurance is viewed as something that only provided a benefit after someone passed away. However, modern life insurance policies include features that allow policyholders to access funds while they are still alive if certain serious health events occur. These events can include critical illness, chronic illness, or terminal illness. For example, if someone is diagnosed with a serious medical condition that protects them from working or creates significant healthcare costs, certain policies allow the policyholder to access part of your benefit to help cover expenses, which is pretty amazing. This feature can provide financial support during extremely difficult moments and can help families manage medical costs or income disruptions. Now, one of the most common mistakes newcomers make when it comes to life insurance is simply waiting too long to consider it. Insurance pricing is heavily influenced by age and health. That's why it's best to get insured early as possible. The younger and healthier someone is when they apply for coverage, the lower the cost is likely to be. Many people assume life insurance is extremely expensive and decide to postpone their decision. Years later, when they finally consider applying, they may find that their premiums are much higher due to age or health changes. In some cases, certain health conditions may even limit the options available. Because of this, financial professionals often encourage people to explore coverage earlier in life when they are healthier and have access to more available options. And another issue that affects many people in the United States is underinsurance. Yes, underinsurance. Studies have shown that a significant portion of Americans either have no life insurance at all or have much less coverage than your families would actually need in financial emergency. Some people rely on a small policies provided through their employers, and those might be somewhere as low as $25,000 to $50,000. While employer-provided insurance can be helpful, it is often limited and may not be portable if someone changes jobs. Others assume that government programs or savings alone will be enough to support your families, but the reality is that many families underestimate the long-term financial impact of losing a primary income earner. For newcomers who are trying to navigate the American financial system, understanding how to approach life insurance can feel overwhelming at first. A helpful way to think about it is to start by elevating financial responsibilities. This includes considering factors such as income replacements, debt obligations, housing costs, childcare, educational expenses, grandkids, grandparents, as much factors you can consider. And once people understand the financial responsibilities that would need to be covered, they can begin exploring the types of policies that may fit your situations. Some individuals may prioritize affordable protection through term life insurance. Others may be interested in long-term planning through permanent policies that include cash value accumulation. And another important factor is working with someone who can clearly explain options without making the process confusing. Insurance contracts can contain many details, and it is important for policyholders to understand what they are purchasing. A knowledgeable advisor can help explain how different policies work, what the costs are, and how coverage fits into a broader financial strategy and system. That includes savings, investments, and retirement planning. For immigrants and newcomers especially, financial education is extremely important. Many people spend years learning about the American credit system, taxes, and employment structures. Insurance is just another part of that system that plays a significant role in long-term financial stability. By understanding how life insurance works, families can make informed decisions that protect your future and reduce financial uncertainty. Ultimately, life insurance is not about expecting something bad to happen. Instead, it is about planning responsibly for the people who depend on you. It is a tool that helps ensure that families have financial protection and stability even in difficult circumstances. For newcomers building their lives in the United States, understanding these financial tools can be an important step toward building long-term security and confidence in the future. If you have any questions, feel free to reach out to us, and we are here to help and serve. Have a great day. Bye.